The reason why so many people suck with money is because they don't understand the rules to the game. And this is why a lot of people get so angry. They get so angry about what other people achieve. They get so angry about everything else going on. But what you need to do, the best thing to do is learn the system.
If you want to become wealthy, it ultimately comes down to having more investments. Your savings are not there to make you wealthy. They're there to protect you against an emergency. Your investments are what make you wealthy. So if you want to become wealthy sooner, or if you want to become a wealthier,
you need more investments.
You need more investments. How do you do that? Well, if it's your income minus your expenses, it's basic math. Either increase your income, decrease your expenses, or do both.
So that's my passive strategy, where it doesn't matter what's going on in the market. I'm just going to keep buying no matter what's going on. The way that the finances look for the majority of people is you make money, you pay taxes, you spend your money, and then you wonder where your money went. But what wealthy people are doing is you make money, and then depending on how you make it, either you pay taxes first or after, ideally after, because there are ways to do that legally, but you make money and then you want to invest as much as possible, and then you spend whatever's left. So wealthy people invest and spend what's left, while the majority of people spend and invest whatever's left. This is what the system is. You can hate it, you can cry, you can scream, you can complain. That's what I used to do. The banks profit when you're financially uneducated because they'll keep you saving money in the bank. They'll keep you in consumer debt. If the banks lived by their own advice, which is save money, the banks would be losing money. When you go and deposit $1,000 in the bank, that cash that you deposited is a liability for the bank. An asset is something that puts money in your pocket. A liability is something that takes money away from your pocket. So when the bank has your cash, it's a liability for them. They want to get rid of it as fast as possible. And the way they do that is by lending it out, because it's an investment for the bank. They don't want to hold on to cash, but they want you to save your money. And what's happening to your cash while it's there? It's losing value to inflation each and every day. And now people are starting to realize, wow, this inflation is a real problem. And so now when you keep your cash in the bank is paying you 0.01%, maybe 0.5% if you're lucky. And they're turning around lending it for 5%, 6%. And so the bank does not want to keep that cash in savings because it's a liability for them. They want to keep you spending money on their credit card because now they'll get to earn 18 to 25% in interest every time you spend $1.
Wow.
Governments want you to be financially uneducated because when you're financially uneducated, guess what? You are an employee and you're a consumer. Who pays the highest taxes? Employees and consumers. Everybody knows that rich people don't pay taxes. It makes people angry, but a lot of times we don't understand why.
Right.
And we get angry at the wrong things and the wrong reasons.
Cut the financial bleeding. That means your high interest debts, your credit card debts, your hard money loans, your 0% APR loans, which are now charging you 20 to 25%. These need to be paid off as fast as possible because these are loans that are skinning you alive financially. Credit cards are a tool. If you have this tool without the education, it will burn you. I only spend with a credit card. I spend
you know how to use the tool
because I know how to use the tool. And now because I know how to use my credit card, what happens? Well, I don't spend more than I would otherwise because I use my credit card just as a medium of exchange. I'm going to spend this money anyways. I might as well use my credit card. But my credit card gives me perks. It gives me cash back. It gives me fraud protection. It gives me free insurance. It gives me hotel upgrades. It gives me all these things just because I use my credit card instead of paying with cash. It's not very complex, but I created this wealth formula, which breaks it down into a very simple, almost mathematical thing, where it's you take your income, you subtract your expenses, and that equals your investments plus your savings.
Follow something like my rule of 5. If you can't buy 5 of them, you can't afford one of them.
Yeah.
So it's, you want to buy a $1,000 phone, you want to buy a $1,000 watch. Okay, fine. Can you buy 5 of them? And if you don't have the ability to buy 5 of them, if you can't afford to do that, then you can't afford one. If you can't buy 5, you can't afford one.
If now you keep doing what everybody else does, you're going to end up like everybody else.
The first thing you have to understand is what is money. Second thing you have to understand is what do wealthy people work for? And most of us, the majority of us, are taught to work to get a job and climb that corporate ladder. But wealthy people are doing something completely different. They're working to own the corporate ladder. They're working for something called equity. And this thing really blew my mind because wealthy people are not working for that paycheck, they're working to own a piece of the company. That way they can get a piece of the profits. Every month, I passively invest my money into stocks, physical, gold, and cryptocurrency.
Really?
And so what that means is it's automatic,
Automatic payment
consistent,
in each
and it
one,
happens
yeah.
all the time. So
You doing index funds with stocks, or what
stocks, I do ETFs, low-cost ETFs, and I have ETFs to give me exposure to the S&P 500. That's kind of your safe, your value. S&P 500 are the biggest 500 companies in the stock market. So that's the kind of the safe value play. I have some ETFs to give me exposure to innovation, startups, growth, because I like that space. Much more risky, but you can see more potential upside. Risk means you could also see more downside. And then I also have ETFs to give me exposure to emerging markets. These are countries that are overseas, countries like China, India, Korea, Brazil, countries that are up and coming, to give you some diversification, not just in companies, but also in dollars, right? Diversifying out of the dollar, so it kind of gives me that protection. So every week I have money that's leaving my account and being invested into these different ETFs. I don't care whether the market's up or down. It happens every week. In physical gold, every month, I use an app for this. There's a lot of apps that allow you to do this.
Yeah.
I have money that's withdrawn out of my bank account
Really?
that buys me physical gold.
Really?
Now, people are going to say, why gold? For me, it's real money. It's another way of saving real money, because now if I have 50 grand of cash, would I rather save and bury that 50 grand of cash in my backyard, or bury 50 grand of gold in my backyard? I'd rather bury the gold, because I know that 50 grand of cash is guaranteed to lose value every single day. Gold is a store of value because it takes time, effort, and labor to mine physical gold. And that time, effort, and labor is represented through the physical piece of gold. So that's why I own it. It's not a huge piece of my portfolio, but it's kind of that insurance. That's the way I look at it. It's protection in case everything else goes wrong, that I have some physical gold. So I have that. And then I have my cryptocurrencies. Now, I'm mainly in Bitcoin. I have some Ethereum, a couple other coins, but mainly Bitcoin. And every day I buy a little bit of cryptocurrency. Again, I know it's volatile. I know you can see big swings up, big swings down. I don't care. I'm buying it every single day. So that's my passive strategy, where it doesn't matter what's going on in the market. I'm just going to keep buying no matter what's going on. If you are spending based off of your net worth, you're living a very dangerous life. And some people do this because they say, oh, I'm worth $1 million, so I'm going to go out and live $1 million lifestyle. You don't have $1 million. You're just worth $1 million. You don't have income coming in. You're just worth this amount of money. And so you go and borrow a ton of money and you start living this $1 million lifestyle, and then things go down and now you're the first one to lose your shirt. So the thing that I want you to remember is, first, regarding the failure, you're not a failure. Just because you failed at a task does not mean you're a failure. It's actually a good thing you failed, because that means you're one step closer to finding that success. And then second, regarding the actual net worth number, look, this is just temporary. Everything is temporary, and you have the opportunity to build something a lot bigger. You have to have the right mindset. Active strategy is now where I do more of the fundamental analysis, where I understand where am I actually investing my money. So this requires much more time, more effort on my end. So on the real estate side, I'm looking for deals that are paying me that 7% cash on cash return. And so I'm going to be analyzing the numbers, looking for properties, walk through a lot of deals. And when I find something, I will go out and buy it. In the stock market, rather similar. I'm looking for companies that I believe in, that I believe are good fundamentally. Fundamentally means looking at the numbers, right? What do the revenues look like? Have the revenues been growing? How fast are they growing? 10% a year, 20% a year? What about the profits? But you also have to look a little bit deeper than just the profits, because you want to see what's going on with the expenses. Where are they investing? Are their expenses going up because the cost of business is becoming more expensive? Or are the expenses rising because they're investing more in their company? So you got to do a little bit of digging in there. And then in startups, obviously I invest in my own companies, but I also invest in startup companies. I love entrepreneurship. I am a huge fan of entrepreneurs. I love supporting other entrepreneurs because I never had that support when I was getting started as an entrepreneur. So one of the ways I can provide the support is through money, through investing in some of these entrepreneurs. So I invest in these startups. Fourth, cryptocurrency. If a big cryptocurrency crash happens, well, I already know what I want to own. I'll just come in and buy more. And with gold, I don't really actively buy gold, but that's the 4 ways that I actively invest my money.
Sure.